Hi, this is Dustin with Dustin's Dollars. Today, I'm going to be talking about Tellurian, specifically about the sale of their upstream assets here, and I'm going to go through sort of an updated, simple valuation model that I have for Tellurian. Before I begin, let me remind you that I'm not a financial advisor or a financial professional of any sort. All opinions that I express in this video are mine and do not represent those of any company or any other individual. I currently hold a long position in Tellurian, so this video should be for your entertainment purposes only. Because I could be wrong about everything that I say in this video, you need to do your own research before making any investment decisions. All right, so Tellurian, they finally sold their upstream assets. You know, we can no longer say that the company has a plan B. We can no longer, joke that we're just invested in a small natural gas producer in the Haynesville, because now they, have entered into this agreement. They're going to sell the upstream assets. It hasn't closed yet, but I think they intend to close this very soon. I can't remember what it said in here. Obviously, it's been a couple of weeks. This isn't exactly bleeding edge information for those of you who follow the stock, but I haven't got a chance to discuss it. I've been busy, so this is my talk through today. And the big news here with this one, well, I guess there's two big pieces of news that really came with this. One was the heads of agreement to actually buy some LNG from the Driftwood plant, but the other, of course, was the sale price of. Sorry, if anybody's there, it looks like there's maybe somebody on the chat. Can you let me know, make sure things are working? I know I had some major issues last time. I can't tell if I'm having issues again or not. So, let me know if you can hear me just fine. That I would appreciate that if you could. I'll keep talking anyways. So they had this sale price of $260 million, which was pretty low. That was definitely on the low end of all of the estimates that I saw. I think even when I ballparked it originally, when we were contemplating, are they going to sell the upstream, or are they going to sell the company way much earlier this year? I think we were looking at numbers somewhere in the $300 to $400 million range. This $260 million is just not. It is much lower than I was hoping for. Again, I didn't really know. As I said, other than the ballpark of somewhere in the $300 to $400 million range, I didn't really know what to expect. And this was, as I mentioned, unfortunately very low. If you kind of do the math on that, figure that they're going to give 10% to Lazard, and $260 million, subtract off that 10%, that leaves you with $234 million. And if you look at their balance sheet that they had at the end of Q1, we can look here. We know that they want to pay off. Oh, you can hear me. Great. Thank you. I really appreciate that. Sorry, I know this must be the delay. It's a couple minutes here. Let me know if let me know if there's any major or dropouts or not. Like if I'm majorly lagging or skipping quite a bit. I can't tell. My app here. I got to get some. I have a new laptop. I'm gonna try that hopefully for my next stream, but I wasn't able to get it set up for today. Sorry, things have been busy. So, anyways, I'm gonna continue on. So they had the senior secured notes. This was really the big one that they needed to get paid off, because they had this cliff that was coming in October where they really needed to have a lot more liquidity, and they just weren't there. So it's good that they're going to be able to pay this off, right? So I think I just told you the math is they sold for 260. If you subtract off 10% to probably, that's an estimate, by the way. I don't know, but I would imagine they're going to give 10% to Lazard for their fee. And then that leaves $234 million. And they had let's call it $224 million of outstanding debt under these senior secured notes that were due 2025. And so they are going to be able to pay those off, hopefully. And also, if you look at their, go up to the actual balance sheet here, and you can see what their, where are we at? Their accrued interest. Where is that at? Sorry, thought it was up there. I guess I'm not sure where I found that. Anyways, it's somewhere in here where you can see their accrued interest, and I have the number written down here, $7.4 million. Their accrued interest, you can find this here in their sort of decomposition, their breakdown of their liabilities was $7.4 million at the end of the quarter. So you add those up, and call that about $231 million, and that really basically takes up all of what they got from the sale, or all of what they're going to get from the sale. That's kind of my view on it, which is to say it's disappointing that the convertible notes are all going to still be there, and they probably really didn't get a whole lot more cash on their balance sheet. So I'm not sure really how to take that. I mean, I guess they probably just got whatever they got for their upstream assets. So there wasn't much they could do for that. I mean, natural gas prices have been low. They weren't in a great negotiating position. So at least they got enough to pay off their senior secured notes. So we at least have that going for us. But in terms of the convertible notes, these, if I recall correctly, are convertible at $1.05 per share. So I have to imagine that, since they were not able to pay this off, the company is just going to be focusing on, trying to get progress on Driftwood, trying to get the share price up above that threshold. And then if so, this $83.3 million of convertible notes, they're probably hoping to just convert that. Because I think the payments on those start in January, I want to say. It should be in here. If we look at, I skipped past the convertible notes. I believe they, it says they're due October 1st, 2025, but I think they are payable, I think, over a 10-month period. I don't see it in here, but that's my recollection. So that has a conversion price here. It confirms it was $1.05. But I think the paybacks, yeah, here it is. It's paid back monthly over a period of 10 months, beginning on January 1st, 2025. So this is going to be a bit of an issue. Yeah, this will be an issue if they have to actually pay that back rather than being able to convert it or raise money from somewhere else. And if they do get to a positive FID on phase one by the end of this year, as they are hoping for, I think $1.05 is probably roughly what they could expect to get to, at least that amount. So, hopefully they will be able to convert that. And, it won't be great to have, an additional 42 million shares outstanding, but it's better than, if the stock price is lower and they have to actually run the at the market offering. In the industry, I think I tried to ballpark it against Comstock or somebody else roughly, and I think I come up with a number somewhere around the $300 million range. So I don't have enough of an opinion. Clearly, I would have liked them to get more money. There's a lot more they could have done. And I think I said that on my first stream, earlier this year when I was talking about what really are their options here. It would be ideal if they'd have been able to pay off the convertible notes as well. And if they could even have some cash after that to be a bit of runway so they don't have to run the at-the-market program too heavily in order to fund the company in between here and, getting more commercial progress on Driftwood, that would have voters. But it's set now. We kind of just have to accept it and make our decisions, going forward now. Knowing that that's the case. And that's why I do have an actual updated valuation model now, whereas I haven't had one for a while. I'm going to go through it in a minute. But this was a really, really big question mark. What are they going to get? Because, had they gotten $400 million, everything I'm saying would be pretty, would be a bit different because, yeah, I see. Sorry, you're complaining about the stream freezing. I had issues last time, and I'm real sorry. I don't know what's going on. I know it looks like I changed my position. All I did was move put a desk in here. So I'm not sure why it seems like it was worse last stream and this stream, and I haven't been able to figure out why. I have a new laptop I'm going to try for my next stream. So hopefully next time things will be better. This computer is pretty old. It's 10 years old, honestly. So hopefully it'll be better. I'm going to try to just keep going forward, and hopefully you guys can hear me. Anyway, so that is, that's the Upstream sale. That's what they're probably going to do with it. So all that money is just going to go to pay off the senior secured notes, the convertibles notes. That $83 million is going to remain. And so hopefully they're going to be able to convert that. Yeah. Anyways, so then if we go to, I guess I could go to the shareholder letter next, which is, this was the really big one that dropped and got people excited because with this announcement, with the Upstream sale, they did announce this 2 million tons per year heads of agreement with Aethon, but that's not really a binding contract, and the market actually wasn't that exciting. They sort of, I think the stock would have dropped a lot more had they not had that HOA announced at the same time that they announced the $260 million sale price for the Upstream, but at least having this sort of soften the blow and give a little bit of hope. But then Martin's shareholder letter that are interested, some other counterparties that are seriously considering, investments in Tellurian. And so that I think is, clearly what everybody's expecting when we see this massive, jump up here. That's what we're seeing. We're seeing that, optimism that they are actually going to get phase one in here. Now, I have a valuation model I'm going to go through because I think there's a couple huge question marks outstanding. And the two big question marks are, obviously the biggest one is, can they get all the agreements in place? Can they do it? But let's assume that they can. Even with that, there's the two big question marks of what are going to be the shares outstanding. That's a big one. And then what percent are they going to own? Sorry, I see some chat message. I'm going to go in and read this. So GBT, hi GBT. I don't think I've seen you on a stream before. Thanks for hopping on, by the way. Albert Huddleston has Saudi connection. So even though the $260 million is low, the Saudi involvement may have been part of it. He owns a golf course and hosts the Live tournament. Yeah, I actually heard that theory, which is really, really interesting. That he owns a golf course and they're gonna host that. Sorry, just to expand it for other people. This is Albert Huddleston. I think he's we'll go and look this. He's the CEO. Sorry, I was looking to see if he's a CEO, chairman of the board, something. He's involved with Aethon, right? Is he the CEO? I can't remember. Oh, of course. Yeah, I don't have a subscription. Sorry, guys. Come on. Close. Well, anyways, I think he was a CEO, managing partner, whatever, of Aethon, and he owns a golf course, and the Saudis own, I think, the women's golf, PGA, something like that. And so there's a connection there where there's some speculation that there might be some behind the scenes things saying, hey, we got some of these deals to get it done, and then you can host your thing at my golf course, or maybe it goes the other way. I don't know exactly the direction here, but there's that connection, right? And so that's something. It is it's clearly unsubstantiated, sort of the backroom dealings that could happen, but it definitely lines up. It is plausible here, so I think it's a very interesting angle and does add even a little bit more of a little bit more credibility. Although as I say, it's we really can't confirm any of that, but I think it would be it is interesting to see that connection exists. Articles that came out, I think it was Bloomberg also in 2018 or 2019. When the first time Driftwood was really kind of gaining commercial steam, pre-COVID, and when they were, right around the time when those sort of rumors came out, that was when there was I can't remember what the forum was, but Sharif Suki had this, pretty long interview at, some energy conference. He was sitting down and asked him point blank a couple questions about Driftwood. One of those questions he asked was, so you guys, you say you're talking to multiple counterparties, who are you talking to? Who are you getting serious with? And he kind of said, you can read the news and sort of see who we're talking to for yourself. And, the news that were coming out at the time were that they were talking to Saudi Aramco. So, this certainly isn't new. I think that the Saudis have, sorry, I shouldn't say they look good, but it looks plausible at least. Let me put it that way. So anyways, getting back on track to what I was saying is I think when we talk about the valuation, even own, right, versus what are the other equity partners going to own, and then what are the Tellurian shares outstanding. Sorry, I see a question on the chat before I go on. Henry California says, did you know Aramco attending golf tournament? They have been at Driftwood 3 times recently. Thanks. Yeah, so again, I don't know. I have heard the connection with the golf, sort of as I mentioned, and I'm not sure how much. I don't know that there's anything concrete, right? I don't know the right people have attended the golf tournament there and have actually been in contact, but presumably, it's plausible that they could have been. But yes, I have also heard that they've been and read something that the Saudis have visited Driftwood, and like I said, maybe it's a minute or two delayed on the chat, but the Saudis have been interested in Driftwood for years, at least allegedly, and so it wouldn't surprise me that they, are still one of the counterparties that Tellurian is reaching back out to, especially now with new management. So, anyways, I did want to talk through some of this, the valuation model they had for Driftwood, and this is a slightly different format than what I've done in the past, and I sort of split it out with. I'm sorry, the volume's cutting out. I apologize. Like I say, I'm going to try my newer laptop next time, and hopefully that will work better. Just been too busy to be able to get set up, so I sincerely apologize for that. Although Chris Sinclair also says, Suki overpaid for Upstream and wasted lots of money while getting overpaid and losing his company's shares as collateral on loans. Yeah, you know, the only thing I'll say about that is they were trying to build the Upstream at a time when gas prices were high. And, you know, it was a part of their strategy to continue to expand their Upstream, you know, at the time where they were trying to be vertically integrated. There's certainly pros and cons to them doing that. It hedges you against quite a lot of risk and did actually, I think, make it more plausible for them to sell. Probably whatever you're doing is killing throughput. Yeah, I'm not sure what that comment means. It's like I'm not doing anything in particular. Last time I thought it was because I originally tried to have it actually filter out the green screen. It's not trying to filter anything out right now. But I don't know. You know, I'm not doing anything different than what I've done in the past. That's why I say I'm just going to try the newer laptop that I have next time. So sorry. I hope it gets better. If not, hopefully maybe I'll have to have a. Let me know if it doesn't get any better, and if it's too bad and you guys are dropping off, I will just have to I'll just have to do, you know, a replacement stream next time on my updated on my newer laptop. So and hopefully that will fix the issue. I'll figure it out sooner or later. I apologize. Anyways, I try to go through my valuation model. So we'll see. I'll watch this back later on and see how bad it actually was from all of your perspectives. So again, I just really apologize there that it's not working so well. All right. So what I did for this valuation model, and you can access this, by the way, in the description. I put a link to this spreadsheet. It'll bring you to this tab, but you can click over here and it'll get you the actual valuation model. You can make a copy for yourself and, you know, modify whatever numbers you want. So anyways, I have a couple columns here, one for plants 1 and 2, you know, which would be phase 1, and then plant 3, plant 4, plant 5. And, you know, so you have the capacity numbers here, right? This is 10.4 for the first 2 plants, you know, for phase 1, and then 5.2 for each of the others. I estimated the EPC cost based off of the numbers in their most recent presentation, right? They actually did have some numbers here, and I think I pegged it at the higher side at $875 per ton for the 5 plant development here, and then I sort of prorated them based off of the prior EPC numbers that we got, sort of in an older in an older presentation. I guess I've got it over here, right? So what I did, just real quick to show you, I used these older numbers of like what were the different EPC costs for each individual stage, and when I used their average here that they have for the total 5 plant cost. So that was how I estimated these numbers for the EPC cost per ton. And then I sort of just used the same model they had in the old one to add on some of their other costs for the owner's cost. And then, of course, for phase 1, you also need the Driftwood pipeline. You don't need that in the further ones. To come to a total cost. So my estimate here, again, largely based off of Tellurian's numbers, as best as I could, reverse engineer them and understand it. $13 billion for phase 1. And then, you know, you can see the further numbers for the future phases here. And from that, you can then sort of calculate the cash flows. I sort of looked at how much do I think they're going to get under sales and purchase agreements versus how much do I think they're going to be able to sell, you know, at spot. What do I think they're going to get on this margin? So my assumption here was 9 million tons per year for phase 1, and then 4 for each of the future phases. And tolling fees of just $2.35. This again came from their expectations in the most recent presentation. I think they have that in their footnote here. You know, if you look here, it says something, yeah, $2.35 SPA price, you know, assumed in all phases. And so that was also what I used. You know, if it's good enough for them, it's good enough for me. Hopefully that's in the ballpark. So they're also going to get, you know, a bit of that premium from, you know, 50% of Henry Hub to be able to just get at $4 per, you know, per MMBTU, or per, I think that's the right unit of measurement. Sorry. $4 times 15%, you know, 60 cents per MMBTU. And then they get you to sort of total tolling gross profit. I called it gross profit. It's not really gross profit, but for this model, it is, you know, $1.29 billion for phase 1. You can see it's about half that for the future phases, you know, unsurprisingly. But then I also assume for the future phases, they would only have to get 4 out of the 5.2 million tons per year under contract in order to, sort of get their FID. And I looked at that. And then for the remainder of the volumes, I assumed about 1.4 from phase 1, 1.2 for all the future phases. Then they would sell that at, spot. The margin they would get is about $10 versus, from the sort of JKM or TTF prices, subtract off the Henry Hub. So about $10 margin there. And then so that gives them, obviously juicier profits because they're selling it at spot with that huge spread there. And, so that gets them, about another 2/3 to $500 million in gross profit from those internationally sold volumes, for total gross profit of about $2 billion from phase 1, a bit over $1 billion for the future phases. So this is for the entire Driftwood project itself. Again, Tellurian would not own all of that. So, and then we also have some of the operational costs. And so I call this gross profit. Really, this is the original sales. This is not what they're getting in terms of you have to subtract off the actual operational costs, which is what I'm doing now. And then so you subtract off the operational costs, and these I reverse engineered in order to get my numbers to come close to what they are projecting for cash flows here. So that's where I worked out those numbers. So these could be wildly wrong if the management is really kind of giving us numbers that are wildly wrong. But that is how I got those, because you put in sort of this $400 million worth of annual OPEX for Driftwood, and then we have the debt cost, right? Because we know what they're gonna have to borrow in terms of, or sorry, that's the debt. That's not the debt cost. That's the debt. It would be $7.8 billion for phase 1 at a 6.25% interest rate, right? That's what they assumed in their numbers here. If you go back down here, you can again see that they assumed they actually assumed $7.5 billion in debt. Mine went to 7.8 because it just did a flat 60%. It's in the ballpark. So hopefully that's, hopefully that explains it. But then they assumed 6.25% interest rate on their debt. Seems a little bit low, but maybe they're able to get that. I'm going with those numbers here because that's what they put forth. And I was trying to match theirs. We can, again, tweak that in a minute if we want to. But that gives us a ballpark number here, which gets us to about, almost $500 million in debt interest for phase 1. And then obviously much smaller numbers for the future phases because they don't need nearly as much debt. And getting all to that, subtract off the operational costs, subtract off the debt interest, and that gets us to, about $1.1 billion in cash flows for, annual cash flows from phase 1. And so that, should line up decently with their numbers here. Oh, I must have been playing around with something. That doesn't quite line up. Anyways, why am I messing? Why is that not matching? Sorry, I went through this model the other day and I had it matching. I must have tweaked some numbers. What am I looking at here? Something's off. It is subtracting off all the right numbers. Man, now I look like a fool. I'm live on here. My model doesn't even line up. I'm so sorry. I'm just not on it today. Why did that not line up with their numbers here? Oh, because this is the cash flows for Tellurian. Sorry, I'm looking at the wrong things. Because that's for phases 1 through 3. That's got it. Okay, so yeah, I was looking at the blue boxes. It does line up because this column here, I had it. This column here comes out to $2.1 billion. This was for plants 1 through 3, not just for plants 1 and 2. And so it's actually this number plus this number. Add those up, you get to almost like 2.1 billion. That is what I was missing here live. It's hard to do things live. You gotta be right. You gotta be quick on your feet. So that does line up here, and then the future phases also do. So you look at that, and we also come down to what percent of this does Tellurian think they're gonna own. So of this, roughly $1.1 billion for phase 1 and, $800 million for phase 2, Tellurian did throw out their assumptions on what they think they're going to own. That is in down here. So they assume this footnote number 2. There's just a lot of information buried here. This is their model, which again, I'm just copying their numbers to start with. So we have an initial starting point. 35% ownership stake in plants 1 to 2, 50% in plant 3, 60% in plant 4, and 65% in plant 5. And so if you pop in those numbers here, then we get you to cash flows for Tellurian of, about $380 million. Sorry, because these are in billions. So $0.38 billion from phase one, that is plants 1 and 2. And then 400 million, 480, and then 540 million for phase 4, which would be plant number 5 if they get to that point. And so that is, again, those numbers go up because they expect to have higher and higher percentage ownerships in those future phases. Sorry. So what I did here then was I looked at what year are those cash flows going to start. So again, I'm not modifying these numbers quite yet. I'm going to get to that in a moment to see what does that do to our actual share price. But if we just take them at face value, and again, the most meaningful one for us in the short to medium term is really what percent are they going to own from phase one. And sorry, Transient Stacker asks, is that more ownership than Next? And the answer is yes. 35% is a bit more than, I think Next owns roughly 21% of their phase one, which is sort of the same volumes of, phase 1 and 2 for Tellurian. So this actually represents a good chunk of more, a fair bit more ownership. On the flip side, I would say Tellurian, we'll talk about this for a minute, right? Because the percent ownership that they have in phase 1 is a really big deal. The reason why it's a really big deal is because the more that they own in phase 1, the more cash flows they are actually going to have in order to be able to put in the equity or to be able to, sort of snowball that in one way or another to get cash for phase 2, phase 3, phase 4, right? So if this number ends up being less, not only is it going to be bad for us because they own less of phase 1, it probably means they're not going to be able to get as much of phase 2, 3, and 4 because they just don't have as much future cash flows to rely on in order to get more equity in those future phases. Probably means the stock price will be lower. So if they need to issue equity, just common equity in order to raise the money to put in their stakes for phase 2, 3, and 4, probably means a lower stock price. So there is a lot riding on what percent ownership are they going to have in phase 1. But sort of you asked that, is it more than Next? Yes, it is more than Next, a fair bit. On the flip side, Tellurian has also put in more money to Driftwood than Next. They also, another thing to consider is the current state of the world is right now U.S. LNG projects, other than a small handful of which, Driftwood and Tellurian are one of them, they're all paused, right, per policy by the Biden administration. So that is something to keep in mind, where it's possible that is really working in their favor, that is going to help them retain more ownership of those. Chris, good question. Sorry. So let me get onto my model. Hi, Chris. Thanks for hopping on. I have watched your streams. So sorry, I modeled this out with sort of discounted cash flow model that goes from 2028 all the way through 40 years here, just to sort of get a decent. I mean, I didn't put a terminal value on it because I just went all the way through 40 years here, and so by putting a number higher than 2068, it basically means for right now the share price is not even including cash flows from future phases, right? So right now I'm just looking at a valuation from phase 1. So this will be a model. Let me go all the way through it here so it makes sense. So I have the cash flows here. Then I also subtract off, I sort of put flat G&A costs, $150 million per year. Again, that could be wildly wrong, but that's just what I put in here. It's a model. You can, as I said, copy it and put in your own numbers. And then you get sort of your annual cash flows here. And this is looking at future years starting in 2028, because that's when they're going to actually potentially get real cash flows. So I put in a year for when did the cash flows start for each of these phases. And so by putting it for 2100, it's not included in these at all. So this is just a value for phase 1. And over here, I sort of put a discount rate of 10%. Then I get a net present value from all those cash flows with this discount rate. Subtract off what their current debt is. If you want to, that's how I'm doing it. Look at the value of the equity that should be outstanding of, sort of $1.09 billion. And then you come to the shares outstanding number. And this also, sorry, I see Transient Stacker saying Tellurian has more shares though. So right now, sort of the last number we got, I think, was 836 million shares outstanding as of April 25th. They've obviously been running the at the market program so that they can fund the company. And again, now that they've sold their Upstream, that is their only source of income. And I did some sort of quick math. You look at their burn rate, and I think probably, maybe take their G&A costs here. Most recent quarter of, I want to say it was about $15 million. Where is that at? Where am I at here? Stockholders' equity. Statement of operations, right? So G&A costs about $15 million. Let's just say they're at a $12 million per quarter burn rate for now. And, if they're diluting at about, let's just make the math simple. That's $48 million per year. And let's say they're diluting at 48 cents per share for the, the average cost they're going to be able to get actual cash in the door for the rest of the year. And that's a run rate of, 100 million shares per year. And so figure just from that, they're probably going to be at about 900 million shares outstanding at the end of this year. They're also, running the ATM so they can fund their ongoing construction costs on Driftwood. You look at Q1, and that was, Driftwood project construction costs. That was $26 million, right? And again, they're diluting this at, less than $1 per share. We'll see, we'll see how much they are. Sorry, there's a comment. I'm going to have to finish watching this on Roku and Chronicles on the phone, one earbud in. I'm not sure what that means. But if I look at this, they're funding this Driftwood construction $26 million per quarter. And yeah, and so exactly, Chris, that's a question. When will they FID, right? Because when they FID, they no longer have to pay all of this. They're not going to have to run the at the market offering in order to fund Driftwood, right? They're going to have the money. And which counterparty is going to set up? Yeah, that's the big question. I don't have insight into that. I know that they clearly said that they're talking to lots of folks, and, they've been doing that for years and years. Seems like Martin hopefully has a little bit more urgency, and they, there's also a question, to the degree to which Lazard is actually helping them get this done. And I don't know. It will be great if they can make it happen finally. But that's why I have this sort of valuation model where I'm assuming if they even get things done, what's the value here, right? And so, sorry, I was talking through some of my math, but I think 1.3 billion shares outstanding is a decent estimate for what are they going to do when they have to run their at the market program to actually fund the company or equivalent, if they do a large sort of offering here to somebody, private placement to, raise some cash to fund the company for the next couple of years. And, that plus what they're going to do between now and when they do FID to continue paying for Driftwood. I think that's a reasonable estimate of where they're going to end up. I think they have 1.6 billion authorized, but, and I hate people don't like to see that it's going to be 1.3 billion shares. For the past year or two, we thought, well, maybe by the time they FID and sort of raise some cash, they'd end up at 1 billion shares outstanding. But, I'm just looking at where they're at. I think 1.3, somewhere in that vicinity, is a little bit more realistic. So anyways, getting to the conclusion here, you look at that, I think a current sort of just a DCF valuation with all of those assumptions gives you sort of a share price of about 84 cents, which is not a whole lot of upside from the current stock. But again, that's only phase one. So if you did look at, let's just put some hypotheticals in here. If you looked at, and I had originally had this one starting at 2028. That's plausible. If they got their FID real quick, I think it's a, sort of 4-year build process. They could start getting cash flows in 2028. So if that sort of pulled it in, it could look at, look closer to $1 per share in terms of valuation. But if you put in some numbers, if you say, hey, maybe they can FID to get phase 2, phase 3, phase 4, you just put those, 2-year increments here. And, if they can actually get these ownership numbers, that could get us in the future to a much higher share price, somewhere in, the $5 range. If they get those quicker, then that would be even better. Again, these are pretty big numbers to really expect them to retain all of that. All right, Chris. Chris says, did you know that Aethon Energy is connected with PIF via Aethon CEO owning a golf course in Texas? I heard that from you, honestly, on the Cash Flow Chronicles. So, which, by the way, anybody who's watching that is an absolutely fantastic podcast, YouTube channel, one of my favorites. on YouTube. I catch every episode that I can. So that I think is, yeah, sorry, he has a lot more here. Live is going to be a stop there. Saudi PIF is the most likely, especially as they are trying to diversify and also counter their mortal enemies, the Qataris. You know more than me about that. That is, it's great to hear. That's again, I don't know that much about all of those things. I haven't been able to follow along, but I think you've done much deeper research than me in that. So I appreciate all of your comments here. It's fantastic. So yeah, but I think as I mentioned earlier, I don't know if you were on here, the Saudis have been interested in Driftwood for years. They originally, there was rumors in 2018 or 2019, and there was even some implications from Suki at the time that he's like, you can look at the news and see who were, getting closer on negotiations with. That was his famous, I should say famous, infamous at the time, sort of quote for folks. But I know the Saudis have been around for a couple of years, and so that I think is certainly makes sense to me that maybe things ended with Suki in the negotiations, and maybe they're back at the table now without Suki. Just some speculation. So anyways, what I also wanted to look at here with this model, so let me go back and sort of, just so you can get a sense of where's the fair value at now if you're looking at, take off the future phases here. Again, that's why these were at 2100. Looking just phase one, what does it actually do if their ownership number goes down? Because it can have a pretty major impact here. Even if we go down to 30%, which again doesn't sound like a whole lot, that chops quite a bit off of this, because this is the Tellurian's ownership of Driftwood and their ownership of those cash flows. They're also going to have their own G&A costs that are coming off of it after that, right? And so again, I don't actually know what this is, going to be. It's really hard to tell so many years out what kind of G&A costs, and we don't even know what their current run rate is exactly for the company, even after divesting of their upstream assets, because they sort of said, yeah, we're no longer going to have the G&A costs from the upstream division, but we really don't know how much was from that. And I don't think they split it out very meaningfully in their reporting. I know they did report by segment somewhere down in here. Yeah, Chris says the onerous terms that Suki offered the original terms that Suki offered too onerous for most counterparties. Yeah, that was, that's definitely the case, right? I think, those of us who've been following the company for a couple of years remember them famously just talking about how they were going to, make crazy amounts of money, and how, they were talking to so many counterparties. They were bragging about it. They've signed, was it 50 NDAs or something? And that was the big thing. And, yeah, I think they overplayed their hand, which is really frustrating, because they had all, and I know I'm preaching to the choir for I know some of the folks here have been around for a while in the stock, but, they had in, when Russia invaded Ukraine, gas prices were high. They had so many things going in their favor. It's so frustrating that, yeah, that they couldn't make a deal, right? Not that they couldn't, that they wouldn't, right? That's really the distinction here, is they probably had lots of deals that are better than what they're getting right now, but that is, it is what it is, right? We can't change the past. Transient Stacker says they sell their upstream and natural gas price goes up. Yeah, that's the other thing. It is frustrating where it seems like they certainly bought high and sold low in terms of their upstream assets. They did that with LNG. Their one LNG cargo that they traded, 3 or 4 years ago, they did the same damn thing with that. Sorry, excuse my language. Try to keep this without any cursing, but that was a very frustrating thing. It's been a couple of years, but they did that weird thing. They're like, yeah, we're going to start trading LNG before we even build any LNG facilities or get anything lined up, and they lost money on that one, of course. So I hate to say it, but the company's execution has been poor for years and years, and that's just, it is what it is. I'm hoping, crossing my fingers, this is kind of their last chance with new management to actually, execute and get things done. Sorry, James DeSierra says, did you hear that Driftwood 200, 300? Not sure where you're going with that. It's a good question. Maybe the question here is, are the Driftwood lines 200, 300, are those part of what got sold off in terms of the upstream assets? And if that's the question you're asking, I really don't know. I was wondering the same thing. Yeah, did you hear that the Driftwood 200, 300 line would not be included in the equity deal? Sorry, they would not be included in the equity deal. When you say the equity deal, are you talking about the Upstream sale, or are you talking about something else? Sorry, maybe you are talking about something else. You mean just the equity in Driftwood? Probably they are not included in that. I'm not sure why they necessarily would be. I mean, they are called Driftwood, but they're not a part of the plant itself, right? There's the entire EPC contract they have with Bechtel, and the lines 200 and 300 are not part of that contract at all. The lines 200 and 300 were added on later, and they haven't been that they were. I really don't know. It was kind of an unknown to me, although I'm assuming that they're still with the company. That's been my base assumption, but they haven't said explicitly one way or the other. So anyways, getting back to this model, what I was really wanted to drive home is this percent of ownership. They really need something like 30 to 35% in order to really stay anywhere close to viable. If they even get to 25%, I think that starts to get harder and harder for them to really to have meaningful cash flows to sort of roll over into phase 2, phase 3, phase 4, because if they do have these G&A costs, which the company historically has had G&A costs that were on the higher side, and again, maybe they'll clean house and maybe they'll be able to do better, but there's going to be some G&A cost to actually oversee this thing and try to continue on with the future phases. So if they were in this sort of a cash flow position, they were really not netting very much. $120 million per year from phase 1, that just doesn't give them a whole lot to work with to say, yeah, let's actually negotiate from a good position. Let's be able to put in some money or borrow to sort of pull forward some of those future cash flows and put money in for our equity in phase 2, phase 3, phase 4. I think they're not going to be in a great state. So really, I think a lot rides on this. I think our returns as shareholders probably ride more on what percent can they actually retain in phase 1, even more so than the shares outstanding. Even if this goes up, 1.5, 1.6, the value does go down, but if they can continue on and again, sort of put in phase 2, phase 3, phase 4, what were the numbers I had here? It sort of just went in two-year increments. Who knows if that's realistic or not? The future will tell, but I think that's, they could still have sort of a runway of growth, a runway of, appreciation here, if they can at least retain this. If they are not able to retain decent ownership, even if they have all of those, I guess this is assuming that they can, let's say they had to drop down 10%, but because of that, they didn't have enough cash flows, and so they had to drop down, let's say 15%, 10% on each of these, make that 40%, make that 50%, make this 45%, it has a compounding effect is my point. So I think it is really critical. What can they get from phase 1? So sorry, James DeSirio says, is there income from the pipeline not included in your model? Yes, this does not include any income from the pipeline. It also doesn't include the the capital expenses in order to build the pipeline. So that's sort of cuts both ways, right? It's not modeled in here at all. So that is certainly a shortcoming of this model. So I apologize for that. All right. I don't really have anything else to go through today. I don't know if there seems to be a couple folks on the stream, so I really appreciate all the conversation. If y'all got any questions or comments, I'll stick around for a couple more minutes. Sorry I haven't been able to stream the past couple weeks. Things have been busy, but I attempt to do my streams every Sunday afternoon, sometimes probably more often evenings now since the summer in Eastern U.S. time. But that's I'm gonna try to do that. I'll definitely cover when there's new developments on Tellurian. I will stick around again just for another minute if there's any questions or comments on the chat. Otherwise, I'm gonna hop off. I really like I say, I appreciated everything, everybody's comments so far, especially Chris. That's awesome to have you on here. Like I say, I've watched and I'll reiterate for anybody else, Cash Flow Chronicles is another podcast, show, stream, whatever you call it, on YouTube with Chris Patel and another guy goes by the moniker of Matt Money. It is another fantastic show if you're looking for something else to watch on YouTube with sort of other financial content. Transient Stacker says, I saw there was an article about them selling Driftwood. I'm not sure if that's old news or if they were thinking about selling now after selling the Upstream. So I mean, that's always been on the table. it that was announced earlier this year, right? When they had the filing, they said, "Hey, we're also considering a sale of the whole company." That doesn't seem to be the direction they're going at the moment. It doesn't be what they want, right? Let's put it that way. You read their shareholder letter. This is really where we're looking for the clues on that. Martin shareholder letter. They are clearly trying to FID phase one, or at least that's what they're projecting outwards. Now, behind closed doors, are they trying to actually just sell the company? Maybe. We don't know. There was rumors that they got, additional unsolicited or what's the word, non-conforming bids for their upstream assets. And, there was some rumors that they got some bids for the whole company for Driftwood, or maybe only for Driftwood. And so I think it's definitely a possibility that, sorry, I saw the most recent comment. I'll get to it in a second. So there's definitely the possibility that they're still going to sell the whole company. I think at the right price, they wouldn't turn it down. I think a lot of shareholders who've been, holding on for years at the right price wouldn't turn it down. I whether it's the best thing for shareholders or not, I don't know. It certainly would pull forward some future returns, I think, if they could do that. But it's certainly on the table. So don't be surprised if that happens. Sorry, Jason Stein. SteinRx says, I missed it all. You bearish or bullish on Tell? I guess I would classify it as bullish. I think if they can actually get 30, there's risk, of course, in this. Like, it is a high risk situation, as it has been for a while. I'm still holding all my shares. Let me put it that way. If you're asking, what are I'm not making any recommendations. I don't do that. But personally, I have not sold any of my Tellurian shares that I've been holding. So, and then I saw James this year says, this is a $40 stock. Yeah, that's, maybe someday it will be when they get to the actual, was it the G2 lease with their second lease? Maybe they'll get all this cash flows throughout, the early mid 2030s. And then maybe by 2034, they'll be able to fund quite a bit on their second site here where they have it listed. Site 2. They call it Site 2. This is the lease they got from G2, where they could have another 30 million tons per year facility at that site. So, we'll see. Maybe it will be $40 stock. We'll just have to wait a lot longer than we thought. But yes, it's been painful to see the mismanagement to date. That frankly, yeah. It's sad to me to see a billion, closing in on a billion shares outstanding. When I originally purchased, I think there was around 200 million shares outstanding. So that's a pretty big discrepancy. And that's what people don't realize. Yeah, the stock has dropped from, $8 down to under $1 now, but there was 20% of the shares outstanding, when it was $8. So anyways, let's cook some. Says, I drive by the project every day. Lights are still on. Yeah, they're definitely still spending the money. You can see that in their cash flows. They are still spending upwards of $26 million for the quarter, paying for Driftwood. That's clearly not they're not going to fund the whole facility that way, but they are keeping the lights on, keeping some construction going. And Jason Stein says, do you have a valuation if they were to sell Driftwood this week? It's hard to say, right? I have a valuation for, I can value the future cash flows, but if they were to sell it this week, it's all whatever they can negotiate. You could say, again, I think your floor for that is, if you look, where's their Driftwood? Up on their balance sheet. Basically, the floor for that is their PP&E. And I think there's a breakdown here. So I would say your floor for that is probably $685 million. And again, this is just an accounting number. This is not their actual cash spent necessarily. But if you do the math on that and you're pretty close to that value right now, if it was $685 million, let me bring my calculator over. 685, divide that by, was 836 million shares outstanding. That gets you like 82 cents per share. And lots of people are going to take money out of that for the transaction. So, it's about fairly valued if they were to sell it today, just at sort of the base accounting value. But I have to imagine that, they'd be looking for quite a premium on top of what they've already spent, because that's a pretty big departure for the company. I have to imagine if they were going to sell it, you'd probably be looking at $1.50, $2 per share. I think you'd probably get at least a 2x premium on top of what they've already sold, given the situation that we are in, right, with the LNG export, authorization pause, with Tellurian being probably the project that could get gas on the water the soonest, given the state that it's in, right? Fully permitted, construction, started, in progress. They've allegedly, and again, do we trust the company that they've done a good job of this? Who knows? But allegedly, they are actually, they've worked with Bechtel. They've sort of done their best to optimize the critical path that remains. And so that, hopefully will only be 4 years, maybe even 3.5, maybe 3, whatever. They've tried to compress that as much as possible before they can start actually shipping LNG, given, where they're at right now, the construction they have had ongoing so far. So, I think, again, all of those, in my book, probably add up to a bit of a premium in terms of what they could get if they were to sell it immediately. So all that to say, I don't know, but I think this is your base. This is your floor price, right? It'd be absolutely unrealistic for them to get less than somewhere around here, right? Because this is what they've actually spent to date. Not entirely, some of these are not, finance lease assets. That maybe you subtract that off, but like something in this ballpark is roughly at cost of what they've done so far. But the additive value of all those other things, I think, really would push the premium of what they ought to be able to negotiate up to easily twice this. And again, I think if you're looking at the potential value of future cash flows, you're looking at a much higher number. And again, this is the net present value if they happen to FID all of these. So if they got an equity partner in, bank financing lined up for all of these, and they were able to FID all of these phases immediately, even knowing that the cash flows aren't going to start until 2028 for phase 1, 2030 for phase 2, and etc., right? This is the net present value. This is the current value. That would be with 1.5 billion shares outstanding. So, you go forward in the future, you expect the value for all those to appreciate every year, right? As they get closer and closer to actually realizing what would it be eventually a $1.3 billion per year in actual cash flows to Tellurian. So I really think they ought to be able to get a bit of a premium, or a fair premium, over that sort of base price here. So anyways, that's those are my thoughts. I'll give it just a moment in case there's any other questions or comments. Otherwise, I'm going to hop off. This was a pretty long stream. I really appreciate everybody sticking around. Sorry if it was choppy. I'm going to have to figure that out. It's a pain on my side for that to not be working out, but I really apologize to all the rest of y'all. So, all right. Well, I don't see anything else on the chat, so I am going to hop off. Thank you, everyone who joined. Thank you for all of the questions, the comments. I really appreciate seeing all you guys on here. It's awesome. All right. I'm going to hop off. Have a good one. Take care.